Hello, everyone. You're welcome. This is week 5 of our trading journey for the year. And I want to welcome every one of you for joining us. My name is Trader C. Brown, or you can call me Charles Brown. And I want to share with you today what I have in stock on you for you on GU. So first of all, I would like to just clear my screen and also sorry about that. Also go to the daily time frame and then look at the behavior of the market on the daily. All right. So now we see that the market is obviously on the consolidation on a daily, as you can see if you zoom out. So there's not much movement going on in the market for the month of January so far. And being the 5th week of the month, we are obviously looking at, again, consolidation. We expect that the market should break out this week, break out of this consolidation to the downside, I suppose. Why? Because I can see that the market is creating a lower high at the top. You can see that this is daily time frame. You can see that's what we have right there. So I'm expecting that it's going to break to the low side of the market by taking out these equal lows. As you can see, these multiple equal lows, even though we still have a lower low here based on the body candle. But again, we have weak giving us almost equal lows at this consolidation. But if you remove your mind from that and just look at this structure here, if we were to look at the structure over here, you will observe that we're bullish, right? Before the consolidation. So it appears that we are bullish before the consolidation, a breakout structure to the upside, and then the market just gets stopped at 12800 psychological level, which obviously is a concern because he's not breaking that high yet. He's now trying to create a lower low version of what we already have on the chart, which is this. So, of course, we have another break high here, which price came back down, break that high. And then what happened? We see that price pull back in to break the low and then created a lower high on that structure. So there's a consolidation going on the daily. So I just want you to know that. So let me take that off, just go back to the 4-hour time frame. Now, on the 4-hour time frame, we'll be able to look at trades based on what the market is doing. As you can see, the market is still maintaining a lower high structure on the 4-hour time frame. So what that means is that the market will still intend to sell. We can see that it just created a new lower low, or lower than this low. So definitely we are looking at a structure of a bearish momentum on GU right now. We're looking at the bearish momentum on GU to the downside. So that means the momentum overall is bearish. Did you get that? That's what I wanted to let you know, that the momentum is bearish on GU. So the first thing you want to look at is how do you not trade based on the direction. So you now look for your directional bias. So your directional bias is to look at the 4-hour time frame and say, okay, what is the market structure telling you? So as you can see, obviously the market structure is not that straight. It's not that accurate. So that's why we have to develop a new strategy, or kind of a new way of looking at the direction of the market, the bias of the market before we trade. And I will just quickly implement that to look for that directional bias for the Monday, Tuesday, and see what happened afterward. Because at the moment, we are still in a very bearish momentum, even though it's consolidating on the daily, but on the 4-hour, we can see that there is a correspondent to the bearish consolidation movement that is going on the daily. So that means there is a kind of correlation between the momentum. So we're looking at the sell. So for that reason, I'll be looking for more sales in every angle. Of course, there's opportunity to buy, but you see, I'll be more looking for sell than to buy because of the pressure that is coming in gradually from the momentum perspective. So now looking at this, I'm looking, okay, fine. What are we going to do? First of all, you can decide to just put a trend line there and say, if it breaks that trend line, you're going to look for a sell. That's another way of looking at it if you want to obviously see that, okay, I want to trade that trend line. That's fine. But I would like you to look at this zone here, this price action here, where you have this consolidation zone where price had to shift multiple times upward. As you can see, that's on the psychological level 12600. So you can see that price came there several times and then reject to the upside. And also we have price rejecting at 12800. So you want to look at those psychological level 1.27, sorry, but it's not close to 1.28, but it's 1.27, around 1.27. Obviously 1.27 is here, but we're looking at 1.27800 or probably 1.27 psychological level 800. Yeah, 1.27800 right there. Okay, or 1.2800. You just put it within that range. But at the moment, I'll just leave it within that range. So that 1.2800 is fine. And look at the behavior of what the market would do. So first, if we break below or push higher, and then I'll be looking for opportunities to sell. But again, looking at using this strategy, using this method of technical analysis is a little bit confusing as well. So I personally will not look at it this way. So what I would do instead is to just take this off and then look at what the market is giving me based on fractal movement. So based on fractal movement, I'm using Fractal X as a trading system that I developed that I'm using. So I'm looking at this structure now. So, okay, fine. If I'm going to look at trading this, so two things come to mind. What has been the market movement for the past few days? So we see that the market push up to this level. I'm just going to do another flow and then see what happened. And then we see that high was broken, and then market shift a little bit to the high and then created a new high. And then this high was also broken, and then it moved higher. We see. And then what happened? That high was, this is the high and moved structure higher. And then it broke that high again. So we noticed that it broke that high again, pushed up higher. And then eventually, instead of going up higher, it came back down. And then we have a structure change. It pushed all the way down. And what did it do? And then rally up again to create this structural swing. So now, first we can see that it broke this high, this push up. Okay, this is the previous high before this push up. So we see this push up happened like that. So from this structure high, it gave us this high. So this push up happened, right? This push up happened right here. So when this high was taken out, so what is the market telling us? It's telling us that this high has been breached. And then we have another consolidation zone. So for me, that makes the structure to come here. And then what happened? The market came back down. Okay, the market came back down to this level. And then what happened? Breached this low again. And then when it breached this low, we have this low. So this was our last position of the market. Okay, when it breached this low. Okay. Oh, sorry. Yeah, when it breached that low. But we know that this push up led to this high, and then it came back down. So this push up led to the high. So the previous low that we have was this, and then the recent high that we have was this. Okay, but this is the swing high. Okay, so now this is the swing high or the range that we're looking at on the 4 hour right now. This is the current range. So personally, I would take that as the current high and the current low. I mean, swing range, swing high and low, right? So for me, that's what we're looking at. So I know that there was a breach here. This was a breach, okay? And for me, that is not followed through because of the market behavior. We see what the market did there by giving us a not follow through. So that means it's a sell market. What happened? Price close, give us a bullish momentum, which was a follow through. And then this candle closed back into it, and then close back into it and reverse backward, which is this. See, if you check that high, this body candle close back into it and then return. So obviously we're looking for more sales to the downside. So what I'm going to be looking for is price push up. How? I will have my gang buzz right here. and I'm looking at price to give me come to my premier zone for a buy. So it's on the discount zone now. I'm not gonna I'm sorry, for a sell. It's on the discount zone now. I'm not gonna buy depending on what the market is doing. So I want price. If I'm gonna say I want price to come back up to the zone, and I'm gonna look for sell. So if price will come up and touch this trend line second time or the third time, I'm gonna look for opportunity to sell all the way down. So this week, I'm looking for that opportunity to get into the sell. Of course, the price already trading in discount. If I find opportunity to buy, depending on what it does, I'm going to look for that opportunity while it's coming down, and I'm going to look for buy to this level. And then when it gets to that high, I'm looking for opportunity to sell, because that's where the momentum is. So that's where the high probability trade is on GU. So this is what I'm looking at on GU. First, there's a drop coming in. There's a drop coming in right here. So I should be looking for price action around this zone to buy that market up, and then buy to this level, and then look for opportunity to sell strong. I may not buy it, I may buy it, but depending on what the market is doing. So this is how you can trade this consolidation as well. If you don't want to, you can also leave it. But this is the way I've been trading it all week. And you guys saw my last video when I showed you on how I make my withdrawal on what do you call it, on Infinity Forex Fund. This is the way I traded for the last 1 month, and I was able to make a withdrawal of about close to $10,000. So again, the withdrawal is still ongoing process. Obviously, they will give you 60% of that for a start for the profit share. But again, it's a good thing. So that's what I'm looking at to do. Again this week. So I'm looking at trading this. Okay, now let's go to Euro USD. Now on Euro USD, we're looking at the same thing. You'll see price give us almost the same thing, but let me just show you what happened. There's a breach to the high side, so the structure have changed. So now we have a new structure to the high side, which was a breach. First of all, let's look at the daily time frame. We can see on the daily, the market is creating lower high, lower lows. So even though it's consolidating, but it's gradually pushing down in a lower high, lower lows format. You might be thinking about, well, this is a retracement on the swing. That's why a lot of people have been kicked out trading this swing high. Because if you were trading this swing high, you probably have bought on 50, bought again on 61, and then it just keep taking you out, and you're wondering what's going on. Because the market is not ready yet to start going up, because it's like it's changing momentum, it's changing directional bias, and that's where you have to come in. So looking at the Euro USD is the same thing, like GU trying to trade in that direction. So what are we going to do? We'll just go to the 4-hour time frame and look at our bias, and then we'll be able to catch the move. We can see on the 4-hour time frame already we are bearish. The market is obviously bearish, as you can see, but we need to position ourselves on the directional bias based on momentum. So right now we can see that the market came all the way down, break this low, and then push up higher to take out liquidity high. So on this structure high where we have the swing high, this current swing high, this is the current swing high right here. And there's the current swing low, which is obviously around this, which obviously great. We have a breach to the lower side. So market have shifted now for that breach. So what the market have did was come all the way down and play around and then before breaking this low. So taking out this low was a breach. Taking out this low was a breach. So right here, what we have at the moment is that we have changed directional bias. Okay, because that low, that swing low was already taken out. Okay, so even though at this level, it was taken out on this one, or probably equal lows, but there was a tap into it that take out this fractal low. So we can see, even though we're using this as our low, okay, we can see there was a breach there already. So that's why we have a fractal there. So this is now the new one that was breached. So at this moment, we have enough follow through to the upside because the market is going to rally back up. So now our recent high is here. Okay, because we just had this structure breach. You see this low breach, and you probably may have had this was a recent high. But when this breach was taken out, okay, this high, All right, could have been your recent high. Okay, but again, looking at it, the range is very small. If I check it, we see that the range is about less than 100 pips, which is not good enough to trade in 4-hour time frame. So if you move your range here now, is even smaller, okay, which is not enough. So that's 75 pips. So I think the movement right now, obviously where the market is right now, is looking forward to sell and is in a sell zone. I believe if you use your gun box, you see that is really in a sell zone, but is breaking lower from that zone. So what you want to see is that this is not the right movement to the trend, because it's telling that it's a bullish momentum to the bullish directional bias, but is against the overall momentum. The momentum is bearish, but it's giving you a bullish reaction, which obviously is a no trade. So what you want to wait for is, let's see what the market does. If it comes back down and break this low, take out the liquidity, then we have a new reaction. And if it give us opportunity to sell, to buy, and we can look at the next movement. But at the moment, what we see that the market is trending low, and it took out this liquidity here, and it's also a trap within a smaller range. So I'll be careful trading Euro USD this week, except you wait for price to push out of this zone and then head back down. But I would be really careful trading Euro USD. Although it is a sell market, you have to be able to see that it's a sell market. As you can see, there was a liquidity grab that took that place off. And if you go to 15 minutes, you see last week trades. We have one here, price just tally round up, and then there was no, obviously you might see this as liquidity grab, but it was overextended. And then obviously we have the London section, no trade, nothing reasonable, until New York section, where we have a beautiful trade on New York section, which was this on Thursday. And then on Friday, there was reasonable no trade because the market reversed and started going up. So you can see how it consolidated on Friday. So I think trading Euro USD this week, I have to be very careful. Of course, on Tuesday, there was a beautiful trade here on New York section as well. How that beautiful trade that happened New York section. You can see that where price took our liquidity and then sold massively. So again, we have, if you were to trade Euro USD last week, probably have opportunity to cash 2 trades depending on your strategy. If you follow my trading strategy, you definitely have these 2 trades that will give you 1 to 3, 1 to 2, depending on your stop loss. So probably made 4% or 6% last week if you were to trade Euro USD. But this week we're looking at week 5, and obviously, like I said, it's not looking really good on Euro USD. But I will encourage you to join my trading lab. The link is in the description below, where I send daily analysis of my trade. It's not for free, because I'm showing you, if I send an analysis there, it means I'm trading it. So any analysis I sent there is my trading strategy or signal. So it means you're taking a live signal from me, and it's not free. You will see the link there is subscription based. I think 30 pound and 30 pound a month. So you'll be able to join and receive my daily analysis, and you follow what I'm doing. It's very important that you get it, because every day the direction may change, the bias may change, because I trade directional bias. So I like to look at what the market is doing within that 4-hour time frame and see the behavior of the overall, and then look at how I can trade in that direction for the day. Sometimes the directional bias of it on a trade, on a setup, can change or can remain for a whole week and just be trading in that same direction. Sometimes it changes. So for that reason, that's why I created the trading lab, to help people follow me through on my daily analysis and take advantage of my trades that I do every day. So I hope that helped. This is Euro USD and GBP USD forecast for the week 5 of the year 2024. I hope you enjoyed it. If you're new to our channel, my channel, listen, hit the subscribe button, hit the like button, and ensure you share this video with your friends, loved ones, and also watch the live section, the live stream that I do check the live stream section. Don't miss out on those videos where you'll see how I trade live and then help people make money sometime when I come on to trade live. And that's how I trade. You'll be able to enjoy all those videos. Thanks, guys. I'll see you in week 6. Until then, keep blowing your trade up. Don't blow your account, but just keep trading up, making more peeps, making more peeps, making more peeps. I'll see you then. Bye for now.